Good afternoon, and thank you so much for joining us today for our day 2 of our webinar on Megatrends and Payments in Latin America. My name is Abel Delgado. I am the Digital Marketing Director for America's Market Intelligence, and I'm going to be serving as the moderator for today's webinar. So before we get started, I just want to give you a quick rundown of what to expect. We're going to have about 40 to 50 minutes worth of presentation. And during that presentation, we'll take your questions. You can ask a question at any point in time during the webinar. The way to do it is if you look at your screen, you see a series of icons. One is going to say Q&A, and you would click on that, and that will bring up a window. You can type your question into that window and send it. And you can ask at any point in time, and we'll try to take care of as many questions as we possibly can during the course of the webinar itself at different points in time, rather than have a traditional Q&A session. And if we have time to get to more towards the end, we certainly will. So that's sort of the basic thing that you need to know there about asking questions. Now, one question that we always get a lot is going to be whether the presentation is going to be available after the webinar. So I want to answer that up front and say, yes, absolutely. Within a couple of days, we'll send out those materials. For everyone that's registered, we'll be sending out actually 2 different presentations, or perhaps one adjusted one that covers everything. We have to take a look at that to decide how we're going to structure that. And we're also going to be sending video links for the 2 days that we've had the webinar itself. So you should expect that in your inbox for the next couple of days. All right, moving on here, we have our legal notice. This legal notice basically covers liability and our efforts to verify the information provided by third parties, and that we expect clients to use the information in conjunction with sound management practices, et cetera, et cetera. So you can read that at your leisure. We'd like to move on to get into the actual meat of the presentation here. And a quick note about us and who we are. AMI has been operating in Latin America for the past 30 years, and over the course of that time in the payment space, we've executed something like 300 projects researching any number of different sectors within payments. And so part of that knowledge that we've gained over the years is what we like to share in this webinar, and of course in our other webinars and articles and white papers that you may have already seen. So that's basically who we are, and I'm going to introduce our speakers. Actually, let them introduce themselves, starting off with our payments practice leader, Lindsay Lehr. Lindsay.
Thank you, Abel. Good afternoon. Good morning, everyone. We're very excited to be here for day 2 of our 2-part webinar Megatrend series. Today, we're going to be talking primarily about cryptocurrency and alternative finance. So an extremely exciting topic for many of us today. So thank you again for joining us. I'm really excited and pleased to welcome my esteemed colleague and friend, Thiago Dias from Mastercard, who will be joining us for the conversation. One of the most passionate and impactful professionals I know in the development of fintech in Latin America. So we're so pleased to have you, Thiago. Welcome. Thanks for being here.
Thank you, Lindsay. Always a pleasure to get an invite from you, share the virtual stage while enjoying the late carnival holiday here in São Paulo, Brazil. So always a pleasure talking about fintechs, crypto, innovation. So yeah, let's have fun.
Awesome. Excellent. Okay, so diving right in, guys, many of you were here with us yesterday talking about our 6 mega trends. We've done this annually for a few years now, usually trying to cram in 6 trends into one session. This year, there's just too much going on. You guys know how exciting 2022 will be and how many changes and developments we're seeing in the industry. So we're here to present our second set of mega trends. Here you can see what we've identified and what we're talking about overall. If you click one ahead of Bell, this is where we'll see what we're going to be focusing on today. Really talking about credit, savings, and crypto. And all of these are interrelated. They're all intimately connected. We're going to be talking about fiat solutions, blockchain-based solutions, and how they interact. So let's dive right into it. The first thing we want to cover today is what we're calling credit decoupling from credit cards, okay? So for the past 20, 30 plus years, credit cards have been the main source of credit for most consumers in Latin America. And one of the big trends that we're talking about today is buy now, pay later. It's made global press, global headlines with huge high profile acquisitions at the global level, and is starting to really ramp up in Latin America. But the number one question I get all the time is, but we've had buy now, pay later in Latin America for years, through meses sin intereses, through quotas, through installment payments. So we're going to look at this as well as, what kind of credit innovations crypto and blockchain are bringing the region. So if we go ahead to the next slide, taking a moment to talk about buy now, pay later. We know that what I think is interesting about this whole trend is that access to credit is starting to separate away from credit cards. Credit cards are still the primary source of credit for many, but we're finally starting to see some models that really separate it from the actual plastic card and provide, in theory, greater access. So buy now, pay later, it's important for us to start to segment these solutions out and really understand what this term means, because it's taken on this umbrella format that covers many different types of credit. And we've had, as I mentioned, credit card installments available for many years. And these represent anywhere from 10 up to 50% of e-commerce transactions when we're talking about e-commerce in particular. And we're starting to see new models take place where, pure buy now, pay later players, meaning they are creating their own ecosystem, their own wallet, their own payment button that offers credit as well as other types of solutions. We're seeing installments being offered over debit cards. We're seeing the conversion of a purchase into installments after the fact by some leading players in the region. And most impactful so far have actually been leading fintechs, leading ecosystems, launching native credit solutions, which there's no introduction of a new player here, just an introduction of a new product that has really taken off, Mercado Pago and Mercado Crédito being that #1 solution. So, our goal here is to just segment out a little bit and provide some clarity on some of these models. And so far, we're seeing these represent anywhere from 1 up to maybe 5% in some exceptional cases of e-commerce. So it's still very new. And we're going to talk with Thiago about some of the implications of this, what these mean, what are the pluses and minuses. But another, question we want to help answer is really, what is the target of these players? In Latin America, we have about almost 170 million debit card holders who do not have a credit card. So these are folks who are banked, they're somewhat digitized. They just don't have access to a credit card. And so, that's a big addressable market for these guys. Of course, there's also still a large unbanked population and about 100 million credit card holders who have already proven themselves to be credit worthy and are the easiest in some ways to sell to. So different segments require different strategies, and we're going to be seeing this play out. On the next slide, we just looking at a couple more of these leading players and what they're doing around credit. I want to highlight Nubank, Creditas, and Mercado Pago once again, because beyond just offering credit, these players are creating an ecosystem that includes access to credit and a native shopping opportunity. Okay, so Nubank very recently, at the end of last year, kind of launched Nubank Marketplace, and just in the past couple of weeks, launched Nubank Pay, which is meant to combine banking, credit, and shopping all on one platform. All right, Creditas, a very innovative, exciting fintech to watch, really innovating the credit space with their own Creditas store. Offering the opportunity to use credit without a credit card and access a marketplace where consumers can shop directly. And of course, Mercado Crédito, being leveraged strongly along with Mercado Libre. So, not only offering credit, and this is what the global players do with Klarna, for example, offering shopping opportunities directly in the app. Okay. Going on to the next slide, there's still a big question mark about blockchain-based solutions and credit. Decentralized finance. This subject matter requires an entire educational series separate from any webinar that we could possibly cover, but very quickly, decentralized finance refers to the ability to access financing from a decentralized protocol, not from a centralized financial institution. Basically, lending using cryptocurrency and using blockchain-based solutions. There are, at the global level, we see decentralized wallets like MetaMask and decentralized protocols. We have a couple here, MakerDAO, PancakeSwap. These are not names you hear frequently in Latin America, and they're actually still quite fringe and require a really high level of understanding and technical savviness to really utilize and access successfully. So DeFi is still very, very far afield for Latin America. Very, very far off from really, unlike crypto adoption in general, still far from being reality. But what we are seeing, and we're going to have Thiago also comment on this quite a bit, is crypto cards, which are not necessarily leveraging credit yet, but we are seeing crypto cards start to be launched and adopted in Latin America. And Mastercard made a very exciting announcement very recently with the Nexo card at the global European level, utilizing using your crypto assets, able to spend them without selling them and being able to use them as collateral. So that's a very interesting use case that we're going to talk a little bit more about as well. Okay. And just to, map, one question I always have is how much credit can Latin Americans really take on? In some ways, it's a very credit saturated market. In other ways, it's very credit starved depending on the access to credit cards and the debt to asset ratio we see in the region. And so using this mapping, what we see is that countries like Brazil, like Chile, where we have high access to credit in some ways, really are requiring a totally new value proposition for credit to continue to grow. Other markets like Brazil, Mexico and Colombia, Peru are truly credit starved, low penetration of credit, in which buy now, pay later and other innovative models might have a really fertile ground to execute inclusion and access a whole new consumer set. Okay. We continue on here, moving into a discussion about savings and investment. Okay, this is typically not part of the payments discussion, savings and investment, but in the past 2 years, I'd say, and very aggressively recently, fintechs have been innovating in the savings market and offering innovative ways for consumers to access savings products and investment products. And if we go to the next slide, the macroeconomic conditions of the region are important to understanding this because, Latin America has one of the lowest savings rate globally. And this is in part because banking has been inaccessible and products that are compelling for savings have also been very few and far in between. And we know that Latin Americans those who do save tend to keep a lot of their savings offshore. So we have a lower traditional savings rate compared to the global average. And we're seeing traditional savings decline as our interest rates decline. Interest rates have kind of really peaked very recently, and we're going to see a slight tapering off, meaning this fact here is pushing people towards alternative and innovative ways of leveraging their savings and creating investments for themselves. So we take look at some examples on the next slide. Well, what this trend is causing is, we're experiencing a boost in consumption post-pandemic, increasing economic activity, increased money sent offshore because of volatile macroeconomic conditions, and increased dependence on remittances, and fourthly, increased interest in alternative savings options, which is creating demand for crypto and blockchain-based savings options, international transfers and international money movement, and innovative ways to invest locally in fiat currency. So we'll take a look at some examples on the next slide. There we go. So when we're looking at fintechs, okay, so here we see We see Mercado Pago, we see Revolut in Argentina, we see Nubank. These are some of the first fintechs to start innovating in investment and savings, offering interest-bearing accounts for any wallet user, almost any wallet user. First Mercado Pago, followed by Revolut, providing some of the first opportunity to earn interest on your savings for average consumers. Nubank has through New Invest created an entire platform to educate its customers around investing and providing easy, simple access to the stock market. Something, demystifying how to be active in the stock market. And then secondly, we're starting to see fintechs provide access to savings and investment through partnerships with crypto exchanges. Okay, at Mercado Pago, you can now buy, sell, and hold various cryptocurrencies through a partnership with Paxos. Movi in Colombia is actually positioning itself as a way to reload and fund your Bitcoin wallet. And so Lemon, a pure crypto player, enabling the earning of crypto rewards. So you use your card and you earn Bitcoin every time you use the card. And so we're starting to see new and different ways and easier ways to access even more innovative and exciting and varied types of investment and saving through blockchain solutions. Okay. And then more broadly, talking about cryptocurrency, there's a lot to talk about in this topic. It's a whole universe in and of itself, and we're gonna dive into this a little bit more. But one prediction that we have at AMI is that as crypto becomes more mainstream and achieves a higher level of adoption, the more average consumers are taking an interest in crypto, there is going to be a trend towards positioning any crypto product using the term digital dollar. Okay, we've seen that the highest beyond the initial use case of investment, the number two use case for crypto in Latin America is stablecoin. Access to stable coins and access to protecting my savings. And so we're starting to see the dollar in the minds of many Latin Americans is the emblematic image of stability. And so whether it's a digital currency, whether it's actual dollarized account, there's starting to be a convergence of these different platforms around what we're calling, what is being called the digital dollar. So if we take a look at this a little bit more in depth, the next slide, we'll see some updated data we have around crypto adoption. Okay, so just recently, we see that already 1 out of 3 Latin Americans have purchased cryptocurrency. Okay, this is up from 8% when we did this survey back in September of last year. The results came about 8%. Now it's around 30%, and it varies from country to country. But that's already, a very impressive number. An additional 30% are interested, or what we call crypto curious. So that's a potential market of 60% of the entire continent and our universe here with smartphone holders. So people who are digitized, who have access to the internet, 60% of those are either own crypto or are interested. And so huge addressable market, rapid levels of adoption, very impressive. If we go to the next slide, we take a look at the use cases that people say that they're most interested in. And after investment or speculation, which is the kind of still the number one use case, savings protection is number 2, especially in Argentina, Brazil, and Colombia, where we see a lot of challenges with local currency. In addition, as the gig economy and the freelance economy and the barriers between countries start to dissolve with digital nomads, people working all over the world, and the increased need for cross-border money flows, the movement of dollars, the movement of stable coins is becoming even more relevant. And so this is why we think stable coins are going to be increasingly important. And if we go to the next slide, we can start to see already the convergence of digital, truly digital dollars and a dollarized account or a multi-coin wallet. And so increasingly, it's going to be difficult for consumers to differentiate between, is this a digital currency? Is this a cryptocurrency, or is this a dollar account? And does it matter? The more you get mainstream, regular people involved in this ecosystem, the less they're going to care about the technology behind it. And the more they're going to care simply about the use case and the value that these companies are providing. So we see this as a powerful trend, one of many that we can talk about with cryptocurrency, but something that we're already starting to see materialize. Okay. And to kind of wrap up our discussion here before I invite Thiago to join the conversation, this kind of is a nice summary of how we've seen fintech evolve throughout the years. And what we have, this has kind of been over the past 5 years, the evolution of fintech in Latin America. Fintech starting out offering basic service, solving kind of one specific problem, moving into purchases, offering a debit card, enabling acceptance, moving into a step that might provide better opportunities for monetization. So savings, investment, insurance, credit. Once again, expanding into shopping, creating native opportunities for commerce. And then the most recent evolution of this is embedding crypto trading and alternative savings and investment opportunities into the wallet in an effort to keep their competitive edge and continue to add value to the ecosystem. And so the question is, with crypto now being incorporated into the typical fintech evolution, is this kind of a short-term fad thing? Is it here to stay? And how will this continue to evolve? And how will this competitive track continue to evolve for fintechs in the region? Okay, great. So if we continue on, we're gonna, I want to first make sure you guys know that we're going to be taking your questions through this conversation. So we've already seen a few of you adding your questions and comments, so please do so. I also, while we're talking, you guys see the QR code here. This is a QR code to access and download our white paper specifically on these crypto trends. So I'd love for you guys to take advantage of that while we're talking. Okay, so Thiago, there's lots to talk about here. I have a whole laundry list of questions, but
Sure.
I have my list here, but I want to ask you, is there any place you want to start based on everything that we just kind of discussed or showcased? Anything that jumps out at you in particular? Any initial or immediate reactions that you want to start with?
Sure. Let me get started with the last slide that you presented, right? I've been using this same framework for a while now and following this evolution since 2014, 15, when I joined Mastercard. It's been 6 years now. And I do strongly agree with this latter that you built. And we saw this evolution closely with simplified digital wallets, that were enabling people just to load money and do simplified payment transactions, right? Pay bill, top up, mobile top up, and so on, down the road to the most complete and sophisticated services. I think it's a very good description of the fintech environment. Just a couple of data points. I believe this is nurtured by a huge inflow of capital, right? Last year, we had something around $15 billion invested in the fintech segment, as well as the regulatory framework evolution, right? We do see how regulation helps establishing the framework required for companies to succeed in the long term, and how the evolution of regulation actually helped fintechs to strive across the region. With that, we see something around 2,200 fintech companies that we track closely as Mastercard, making sure we have a very compelling value proposition to each one of the sub-segments that arise, being for sure crypto and buy now, pay later, the way you described it during your presentation, the two ones that are more with, you know, with this hype around technology adoption, new use cases, and so on. The most recent review we did around crypto, we could find more than 100 different companies across the region. And every time we dig a little bit deeper, we find more and more players with many interesting use cases, from proof of attendance protocol to crypto exchanges, down the road to DeFi, flash loans, and so on. So it's a very exciting environment, many use cases, and all of them being you know, monitored closely, embraced, and supported by Mastercard in many different ways that I believe we are going to have the chance to discuss later on.
Okay, awesome. So we're seeing this ladder being built, and at this point, the ladder is quite complete. There's many services, many options, many ways to compete in the market. And you know, I kind of had this question at the end of my list, but since we're talking about this, one question I want to ask you, and then we can go specifically more into crypto. But yesterday, in our discussion with Revolut, Juan Miguel, you know, mentioned, you know, Revolut is a financial super app, and their strategy is in Mexico to kind of come in and quickly ramp up to being a full service app where you can manage all of your money and do everything you want on one platform very quickly. That strategy has differed from local players who kind of one by one go solving problems in an incremental fashion. I mean, Nubank came in and really with a free credit card, that was their basic product, super successful, solved a very specific pain point, and then started adding features as they went. So you and I were having an interesting discussion about this. So can you speak to that? You know, the trend in Latin America has been offer one product and grow from there. Revolut, for example, is saying, no, we're going to offer many products as quickly as we can. What's your take on that difference?
I think the difference is basically around how mature they are in their headquarters, right? So Revolut has been building their business since 2013, 14, if I'm not mistaken. They even joined our Global Star Path program in 2015. At the time, trying to figure out what was the best value proposition to put in front of their target audience. But they are now ready, right? They are a complete suite of financial services, features, solutions, and services. So it makes a lot of sense by the time it's much more about international expansion rather than building a new business. Obviously, there are many requirements that they need to build to land in Mexico, but it doesn't make sense for them to reduce the wide range of services to then expand back again. As opposed to the ones that are, you know, being born in Latin America, we have many cases similar to that, right? PicPay, Recarga Pay, Nubank, they have very similar stories on going from a very specific set of features and specific focus on solving specific problems of their consumer base, then evolving to issuing cards, offering credit, and so on, exactly the way you describe it in the latter. I think there is another element to that that brings actually two elements, is the infrastructure, right? The enablement of the market. In the past, for you to connect to a biller, for example, it was much more challenging than it is today. Mm-hmm. So you have many enablers like Pomelo, like Swap, like Cacao, now Doc in Mexico, that bring to you a whole range of features that are, you know, built in the value proposition. So it makes it easier for you to come with a more complete value proposition. At the same time, alliances got more, you know, simpler to be built. So you can bring other elements that you don't want to develop by yourself, credit, insurance, investments, and just attach to
fintech in a box, or, you know, this fintech
in a box. Yeah. And the last one I would say is like more on the niche player type of player, right? I gave you a couple of examples in our discussion around Banco Maré, Impact Bank, Moeda Seeds, Conta Black, and a couple of others that they are laser focused on a specific niche. And then in this case, the set of services and solutions may be very, very specific for that target audience, right? So I think it's a combination of the three, right? The ones that are building as they go, the ones that are building for a niche segment, and the ones that are coming with a more complete suite of products and services. What I can tell you, if you get the names, the numbers that I share, right? 2,200 companies in the region. Mastercard recently announced it back in October that we're working with more than 100 fintech partners, reaching 100 million cards only under this segment. I can tell you it's a very competitive space, right? So the one that brings the best combination of UX, CX, suite of financial services, right? Extremely simplified onboarding, and working with the constant feedback and iteration with the customers by building a conversation rather than pushing a message. I think it's a very good formula for success.
I really like that, building a conversation instead of pushing a message, more collaborative, more building minded rather than pushing it out. Okay, thank you. I think that's a great conceptualization of the competitive landscape. Helps organize it in my mind a little bit better. Okay, so let's go a little bit into some of the specific content here. And there's some questions, already in the chat here. If we go to the discussion about credit, right, and specifically DeFi, and I'd love for you to tell us a little bit about some of the recent launches from Mastercard. But someone is asking, are there any DeFi use cases in retail already implemented? Now, I'm not sure if you're talking about in the region or globally. I would say no, certainly in the region. But maybe you can talk a little bit about the recent first crypto card that was recently announced.
Yeah, so we just announced a Nexo partnership in Europe. It is actually a credit card that is backed by your balance in crypto. So this solves for a very specific challenge, because the previous use cases that we had so far, they were all attached to a pre-sell or a pre-conversion of crypto into currency so that the transaction could be authorized, right? And I will talk about some principles. I think it's really good to clarify that on how Mastercard sees this space, but right after describing the use case, right? So imagine you have, I don't know, an amount in Bitcoin, Ethereum, Solana, whatever, and you want to have a transaction with your credit card. You get your balance converted into fiat. And it may not be the best moment for that. Why? Because as of now, as we saw in the presentation, the vast majority of the use of cryptocurrencies is for investment and speculation purposes, right? So it may not be a good moment for you to sell. What we solve with Nexo is actually that you can decide what is the best moment to sell your cryptocurrencies, if any, because you can maybe then pay your statement with real fiat from your salary or whatever. But if you don't pay the statement in a given time frame, then and only then your balance in crypto could be converted into fiat. So it gives more choice, more power back to the consumer. That's the beauty of Nexo use case, right? So it's an extension of credit line based on your balance in crypto. This is not conceptually extremely new, right? There are other use cases where you back the credit card with your other investments, but from a crypto segment perspective, it is unique, right? It's a first in the world, and we've been supporting as many use cases on the crypto card program as possible. We have 5 key use cases that we work with, right? Like Gemini in the US, which is a normal co-brand card with rewards in crypto. So this is much more for the ones that want to be rewarded in crypto related to their purchases. We have another one that is Nexo. I just described it. Another one that is from Brazil, and I like a lot because it's Tainá is the founder of Moeda Seeds. We've been supporting them since 2018. They joined our StartPath program as well, and they do work on a very interesting DeFi case, I could say, where people can buy tokens that will be then transformed into credit for farmers. And beyond the farmers themselves having access to credit, you can then, actually what they do, Moeda, is that they also support then through business management tools, partnerships and alliances to extract more value from their work. Meaning that the full network is back then monetized if you sell the case of Baru, which is a specific seed in Brazil, where they supported the farmers to actually produce a craft beer that is much more valuable than the seed itself. So you can monetize back, valuing the token and enabling through the card every single piece of the chain, the lenders, the platform itself, and the farmers to spend their money through Mastercard cards. So it's a DeFi with tokenization use case that I like a lot, powered by Mastercard, driving financial inclusion. So it's the best way to
That's a great, real impact-oriented example, because so much of, a very high share of crypto activity is still concentrated among early adopters, super techie people who understand it, who are passionate about it, and among kind of your average Joe, it's really still very experimentational, right?
Exactly.
This is I hadn't heard about that. That's a terrific example of how something is really creating new possibilities for people.
And it brings us to another type of discussion or aspect of the discussion, which is how to abstract the challenge of dealing with the technology, right? There is still a need to have very friendly UX. And that's what fintechs, they do better than anyone else, right? So Moeda is a great example. The other program is from Argentina that was recently announced. It's Velo. Velo just joined our crypto acceleration program. Manu, the founder, is doing a great job there. And it's like, I would say, a more normal use case, but still interesting on how we enable people to purchase with their crypto balance. In this case of Velo specifically, the conversion from crypto balance to fiat happens in real time. So by the time you do the purchase and you get the authorization, then your balance is converted into fiat, and in the network, everyone sees in local currency. So you unlock the acceptance network, right? For any Velo user to purchase using the cards.
So Thiago, thank you for bringing that up, because another question here from the audience is, I'd like to better understand the flow, the payment flow using a crypto debit card. And so there's different ways that this works, but maybe you could just repeat what you kind of just said and how that flow works. Oh, I think you went on mute.
Sorry, I clicked it here. So I would describe the three most common ones, right? First one is very normal, but with a little bit of friction, where you first put a sell order. So you sell your cryptocurrency, you load a wallet in local currency, and then you can do a transaction, right? It works, but I would say it's not the very best experience from a consumer perspective, right? The second one is Velo, where they do the heavy lift behind the scenes. And the UX is awesome because you can have a screen with all the balances that you have. So you may have pesos argentinos, Bitcoin, Solana, Ethereum, whatever. And you drag and drop the priority of the balance that you want to use. After you save, the technology does the work for you. By the time you run a transaction, if the priority balance is not enough to approve a transaction, the immediate next one is checked, and in real time is converted into fiat for that transaction to be approved. So that's
so you don't get a message saying, oh, you don't have sufficient balance. It just goes
only if you don't have balance anywhere, right?
At all. But it just, if you don't have sufficient balance in that asset, it goes to the next one.
It goes to the next one.
Okay.
Yeah. But then another problem came because people started to say, yeah, but maybe I don't want to sell that, even though I told you you can sell for me. Maybe it's not the best time for me to sell it. Volatility, speculation, right? And then we came with Nexo to be more like of a credit line associated to a given balance that you have in many different coins. So you have time to decide what is the best time to sell if needed, or you can load with another currency or another fiat currency to be able to pay for that statement, right? So I think these are the three main use cases that we've been working on. I see here in use cases from Mexico, I would say soon to come. We don't have many crypto card programs in LAC still, but what I can share is that we've been working, I told you 100 different exchanges. So 2 weeks ago, we had a very good, in both size and quality, a very good team attending Bitcoin conference. And it was like amazing, the number of opportunities and relationships we built there. So you can expect many news coming along this year.
And I guess that, I'm getting clarity from what you're saying. The big problem that fintechs and Mastercard and other partners are starting to solve is, okay, I want to keep my money in cryptocurrency, either for investment purposes or to protect my savings, but I need to be able to spend it when I want to spend it. And so that's what I'm seeing is kind of the solution that is becoming more readily available. Hold my money in these alternative assets, but have quick conversion tools to be able to use it when I want, with a good user experience, without losing money in fees and time, and just being able to have it seamlessly integrate into my everyday life.
And that's the point where I believe I can share the principles that I wanted, right? So we truly believe that the trust of our network is really paramount, right? And thus we are taking a very thoughtful approach based on the 3 principles. 1, stability, right? This connection to the fiat currency helps bringing reliability and assurance, right? We reduce significant fluctuation in the perceived value. So imagine you want to buy this pen that you are using to write down your notes, and the merchant that sells the pen receives 20% less of the expected amount just because of fluctuation, right? Second, regulatory compliance, right? It's core of our franchise business, right? And it always starts with whether the operation is permitted as a form of exchange, right, in a specific country. And then it continues through all forms of regulation, AML, sanctions, and compliance, right? We do believe this brings choice, trust, and security to payment methods. That's how we built the business in the last decades. And the last one is consumer protection, right? People do expect for their payments to be guaranteed at a defined value with data privacy and data security. So everything that we build is around these 3 core principles. And anytime we see use cases that are compliant with these 3 principles, it is something that we want to explore, build, co-create with partners.
That's very clear. I love that framework and how that's driving you guys. So that's awesome. Thank you for that. And just going back quick, the follow up on the Bello case, follow-up question is, just to clarify, the consumer is paying when they're using they're paying with an actual Mastercard debit card, right? Or
exactly.
It's drawing off their Bello balance. Okay.
Yeah. So the balance is connected. So by the time you have a transaction, so you dip your card in a POS or you type your card credentials into an e-commerce checkout, the authorization request comes to Bello, and Bello does all the hard work on deciding whether the balance is available or not, and then authorizing that transaction, that purchase transaction to happen. So that's how it works. And that's the beauty, right? Because it's the intersection of the crypto world with the real world,
right?
Enabling a network of the last number that we announced is something around 87 million acceptance locations across the globe. So this is the powerful reach of the network that I believe after these very intense three to 4 months of connecting to the ecosystem. I believe now this value is understood, well perceived, and that's why we do expect many more businesses around this crypto space to come. So
okay, so you're optimistic about future opportunity here. And maybe another principle I would add to your list that I've heard you talk about before, but tell me if you agree, but that of, enabling consumer choice. You guys want to, okay, you want to hold your money in crypto assets. Great. I'm not someone to tell you that's not a good idea. Let me enable that for you and empower you to do that and then be able to use it wherever you want. Would you agree?
Totally. I think it's part of another piece of our strategy that we call multi-rail strategy. And it applies not only for crypto, right? It applies for any new payment method that arise. People usually ask us about, PIX and CODI and SPAY and Transferencias 3.0, all of that. We strongly believe that choice is at the heart of how we should face and create meaningful relationships with customers. The question then is around how do we add value as a payment technology company? It can either be through adding security layers, right? We've been going through a series of very strategic acquisitions like CipherTrace, like Ekata, like NuData. So they are companies that are not even connected necessarily to the cards business or even to our network business. But we do believe we can add value to other networks through infrastructure, through application, to settlement services, as well as cybersecurity and intelligence, analytics, platforms, and so on. So whenever we talk about consumer choice, it's something that we do believe is good, because then we are always setting the bar higher and higher in terms of UX, protection, and speed. At the end, the benefit comes down to the consumer.
The consumer is the winner, the ultimate winner in all of this. Going back to this question, the audience questions are, what are the use cases for retail? And one question mark that I have is, we've seen yesterday, we had a slide and we talked about, crypto as a means of exchange and some select brands starting to accept cryptocurrency directly. So Tiendas Electra in Mexico, Rappi made a recent announcement. So the question I have is, should merchants be thinking about accepting crypto directly? And I ask that question because it seems like we're having increasing availability of technology that allows you to convert to fiat instantly at the POS. And so is there a benefit to accepting crypto? How should merchants be thinking about this? Is it just, I want to be innovative and I want to show that I'm on the leading edge? Is this actually a successful strategy for customer retention, for payment method, optimizing payment method acceptance? How do you think merchants should be thinking about this?
So my take, and we've been talking to many of the largest retailers across the region, is basically in three big buckets, right? The first one is around what is the user experience you want to offer, right? The second is still, and again, on volatility and the risk of managing a high volatile type of currency, right? And then the third one is how do you want to add complexity or manage your payments business? Because with the solution of enabling the existing acceptance points through cards, adding a new receivables, a new payment method, a new accounting, a new reconciliation, it comes with a burden, right? I'm not saying it's not the way to go, because PIX is there, right? We saw a great surge of acceptance online and even in the POS. But then you always need to think back to economics, consumer experience, and what are the impacts to your business. You can take El Salvador as an example where Bitcoin became a legal tender, right? The number of calls we received in the day after saying, how can we right, start accepting Bitcoin was insane. I believe it's making a good progress, but in terms of, again, customer experience and real adoption, the numbers are yet to tell us if it's a successful strategy. Anyway, anything, again, that brings consumer choice with protection and in a secure method, I think it's something that we will support, and we will find ways to collaborate.
Okay. Yeah, I'm thinking. The El Salvador case is really fascinating, and it goes back a little bit to a discussion we were having yesterday about when the government becomes judge and juror, right? They're regulating the payment space, but they're also competing in the payment space. We were talking a little bit about that with Pix yesterday, and Chivo Wallet is another good example of that. So that just reminded me of that conversation. And now with an additional layer to that is central bank digital currencies, which we didn't cover in this deck. That really requires its own discussion. But an additional trend to add here is that it seems like central banks are really taking a more active role and looking to whether or not actually compete for competition's sake and for revenue generation's sake. I don't think is the purpose, but actually being a competitive offer in the payments industry, we're starting to see that as well. So it's a fascinating layer of all of this.
Yeah, exactly. From a CBDC standpoint, I would point two things, right? We've been supporting the very first CBDC in Latin America from Bahamas, the Sand Dollar, together with a fintech called Island Pay. It's a very interesting use case for benefits disbursements. And also, we've been working closely with different companies, as well as developing our own sandbox environment for CBDC use case piloting. So when we look at 80% of the governments in LAC exploring CBDCs, the likes of Brazil announcing that in 6 months or so, they will be launching the digital real. I think it's something that we want to be in the conversation from all points of view, right? Public policy, what is the use case? What is the problem that you're trying to solve, actually, right? Because it's not only about...
That's a big question mark I have. What is the problem that CBDCs are trying to solve?
And that's a question that we always bring to the table, because depending on the problem you're trying to solve, the solution, the partner, right, and the application may need to be different. I think there are some cases where things are developing so fast that, wrong choices can lead you to a very unsuccessful decision or adoption. So I think it's much more on how to be close, to partner, to bring the expertise that we've been, getting for 50 years on building a resilient, sustainable, and safe network, right? And then how can we share insights and experience with the governments, as well as helping them to identify the best parameters of the solution, the best partners to deploy, as well as the use case that will drive the most impact from a government and a public point of view.
I think that's just a fantastic principle to have for anyone when you're trying to develop something. You can so easily get swept up in the hype of what's going on with a fear of not doing it or of being left behind, but just making sure whether you're a government or a fintech or bank or anyone, what is the problem I'm trying to solve, and then letting that guide your moves. I think that's fantastic. We're nearing the end of our time here, but I have just two specific questions I want to ask, and one is related to this is a little bit more tangible, but we're seeing, you have crypto exchanges, and then you have fintechs that are enabling access to crypto assets. And banks have not yet dived into this, in large part due to regulation in some markets, but we know there are a lot of experimentation, and banks are asking, what should I do, right? So the question is, consumers, how do you think, who do they trust? Who are they most likely to go to as they are also experimenting with crypto? Do they want a pure crypto player? Do they want a fintech where they use, they log onto their neobank, or digital account on a daily basis? Do they want a bank because of the security that might provide? What do you think?
You always put me against the wall with this kind of question, right? So, but look, let me try to frame in a very clear and realistic way, right? There is no doubt that bank brands are always related to trust, right? Mm-hmm. To solidity, mm-hmm. right? Mm-hmm. This is given and it's not questionable. On the other side, you have new generations, right? Gen Z, millennials, and so on. I always use my kids, Eduardo, 8 years old, Mariana, 9 years old, 8 and 9. They already have a neobank account with their own card. Whenever we go shopping, I give them like a limit and say, look, you need to make decisions. You can save money or you can spend, you can share things with your sister or your brother. So they don't even know what a branch is, and they will never get into a branch, right? So, and I'm trying to make my point here in terms of new generations are more open and willing to test different providers in terms of brands, and the coolest, the better, not necessarily something that is completely solid. At the same time, they do recognize that their savings must be protected, right? So it's a hard balance to have. The way I see is an intersection, right? On one side, extreme side, you have crypto exchanges that are very core to a type of relationship that is, I do a top up, I select the coin, I buy the coin, and then I open the app once a week, or some people twice a day, to check my investment. So in the long term, maybe this is not enough, right? Mm-hmm. For you to build a meaningful relationship with your customers, mm-hmm. and also to drive profitability, right? On the other side, you have the banks that know how to be extremely profitable, solid, trustworthy, that need to keep up evolving and addressing their customer demand as fast as possible. So you see how things can easily converge, right? You were saying that banks are more skeptical or hesitating. I see a question here from Juan. But I've been dedicating 90% of my time, literally, to the crypto business in the last 2 months. And many unexpected traditional companies have been reaching out to us saying, can you help us understand what are the opportunities? What can we do? And the crypto as a service has become something very appealing and interesting in terms of how to give a first move into that direction, or crypto rewards. I would say crypto as a service for you to enable buy, hold, and sell the way Mercado Pago did, or crypto rewards. I think it's the easiest and more digestible way for any non-crypto by nature company to enter into this space and to start offering something meaningful.
Crypto cards, crypto rewards, super tangible, super easy to understand. That's terrific.
And then in the other side, the other extreme, you have the exchanges that are also, recreating their business, saying, I do need to enable bill payments. I do need to enable top-ups. I do need to enable DeFi credit lines, right? To get closer to what a full suite of financial services would look like. So you can see this at some point in the future. I don't have the answer, $1 billion question again, but I see both playing a really key role on matching and supporting consumer demand, right? Our research told that,
matching
right?
And supporting consumer demand.
Even the SMEs come to us and say, came to you, right? You were asking the questions. SMEs answer to you, due to my consumer demand, I feel I need to accept crypto. Imagine that, right? It's not myself as an entrepreneur that I want to accept it. No, my customers are asking me that. So
that's
imagine
another
the same.
really interesting insight, is that this seems to be really unlike other fintech stuff. This is really being driven by customer demand in many ways. So I think that's another fascinating element to this. So we're just out of time. I do want to take a moment to launch a quick poll here. So if you guys found this interesting, if you want to know more, AMI, we're dedicated to analysis and data and insights and strategic consulting and helping you navigate this very turbulent and difficult to forecast scenario. So if you want extra support, we're happy to reach out to you and talk about what that would look like. So take a moment to just answer this real quick poll. And in the meantime, while you guys are doing that, Thiago, any final thoughts, any final words, any last insights you want to leave us with?
I want to invite everyone that is in the crypto space to reach out to me or any of our fintech leads in the given market. We have a huge team dedicated, obsessive about promoting the fintech space, as a consequence, the crypto space. So we are open for business. Reach out to us anytime. We are happy to help you understand better the scenario, what are the business opportunities to enable crypto card programs, to invite you to join our startup engagement program, starpath.com. So happy to connect through LinkedIn, through email, any form of contact.
Terrific. Okay, well, I'm sure we caused you to have more questions than answered them. That's just the nature of this stuff as it's evolving. So thank you everyone so much for being here, for your time. You will get a copy of all the materials in the next couple of days. So thank you for joining us, Thiago. Thank you so much for your insights. I love how you frame things. You help us understand what's going on at a high level. So thank you once again. Feel free to reach out to Thiago and myself, and we'll be in touch very soon. Thanks, everyone.